Good morning, ladies and gentlemen. Alex here, Senior Account Executive at GDMFX with today's European session outlook. We'll start with the North American markets. In Canada, we had unemployment rate come out at 0.2%, worse than expected at 7.1%, and net change in employment 2.1K, better than expected. Imports month-on-month 1.7% worse than expected. Imports year-on-year 0.6 better than expected. Exports month-on-month 0.5 worse than expected, and exports year-on-year 0.3 worse than expected. That's from the US. Exports are likely weakened due to the overall stronger dollar, making it more expensive for the buyers of US goods. We also had the Bank of Canada Business Outlook Survey. The central bank found most businesses had a slowdown in sales growth in the economic downturn of the first half of the year. We're seeing the adverse effects of weak commodity prices work their way through the economy. Today we'll be waiting for Bank of Canada Governor Poloz speech, and that's all from the US markets. Onto the EU markets, where French industrial production rose more than expected in August, helped by a strong rise in manufacturing output in the automobile sector, data showed Friday. Industrial production in the Eurozone's second largest economy rose 1.6% in August from July. The euro against the US dollar ended with 72 pips up, and the most important news for the Eurozone during the week is the inflation data, which is due this Friday. In the UK, trade and construction held back Britain's economic growth in the third quarter. A fresh batch of official data suggested Friday, confirming earlier signs of a slowdown. The UK bought abroad £3.3 billion or $5 billion more in goods and services than it sold to the rest of the world. The gulf is £1.2 billion narrower than July's, which was the widest in more than half a year. But both months combined already double the deficit registered in the second quarter. This means trade would need to be in surplus in September in order to make a positive contribution to economic growth in the third quarter. A virtual impossibility because it hasn't happened since 1998. Friday's data add to a hefty amount of indicators showing Britain's economic expansion lost some luster between July and September. Many economists believe official data set to be released later this month will reveal the economy grew 0.5% in the third quarter compared with 0.7% in the second. The Bank of England, however, remains more optimistic. In a set of forecasts released Thursday, officials at the central bank said the pace of economic growth was likely to be 0.6%. The FTSE 100 jumped 0.7% to close at 6,416.16, extending its weekly gain to 4.7%. That was the largest advance for 1 week since December 2011. Right onto the Asian and Pacific markets. Markets across Asia rallied Friday after details from the US Central Bank's latest meeting cast further doubt on the prospect of higher interest rates this year. We had no news from Japan on Friday as it was a bank holiday. We do, however, expect the Bank of Japan monetary policy meeting minutes, which are due overnight. They'll be very important. The Nikkei 225 is 124 points up on Friday. We also had the New Zealand House Price Index 38.3% down from 41.7%. The Australian dollar is holding on to the gains made at the end of last week. The best forecaster of the Australian dollar isn't focused on the recent surge that sent the currency to its best weekly gain since 2011, predicting it will fall back below 70 US cents by year end. He predicts China will probably lower the annual growth target in its new 5-year plan to 6.5% from 7%, while a Fed interest rate increase in December will also keep pressure on the Aussie dollar. He reckons that pressure on the currency from Fed tightening would be enough for the Royal Bank of Australia to stay on hold until at least the fourth quarter of 2016, when forecasts signal a lift in the Australian dollar rate by a quarter point. Alright, commodities now. Oil extends gains near $50 a barrel as OPEC sees demand growth. Global oil prices have bottomed out with signs of a recovery seen in 2016, Qatar's energy minister Mohammed Al-Sada said. Gold prices edged higher in European morning hours on Friday as weakness in the US dollar continued after the minutes of the Fed. Giving little indication on the timing of a rate hike. And for gas, 85 gas projects are dying on the vine as LNG's promise falls short. Gold had a range of $19, trading at $11.59 now. Silver had a range of 42 cents at $15.87 now. Crude had $1.70 range at $49.40 now. And natural gas had a $1.35 gap upwards, retreating 85 cents from there, and is trading at $2.51 at the moment. Alright everybody, thank you for the time. This was today's European Session Outlook. I'll see you next time. Goodbye.